Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 20th of February 2022. So the dollar index has broken below last week's low at 103.90, which is interesting because we haven't had any data to support the move. So I'm not sure if this weakness can persist because of the lack of data. So what I'm looking for now is a potential recovery and a move back above 104.26, which was a December high. Should that happen, I think that will be a bullish signal that could then send things like the euro dollar, pound, gold, all of them lower. Looking at the euro dollar now, as you can see, it has broken the 108 level, which had been support and resistance in the past. It is now testing the 200-day moving average, which is going to offer some resistance, as you can see by the wick of the candle. So it's going to be interesting to see where the euro dollar closes today's session. A move back below 108 will be very interesting because it will have created a bearish looking signal and could then pave the way for fresh weakness moving deeper into the week, whereas a strong close above 108 could be an indication that perhaps the euro dollar has bottomed out, at least in the short term anyway. If the euro does close above 108 cleanly, then I wouldn't rule out a move to 108.97, which was the high from this candle hit on the 2nd of February. All told, the trend is still bearish on the euro dollar, so I think we'll need to see some further bullish price action before concluding that the trend has turned bullish. Here we are looking at the dollar yen's weekly chart, and as you can see, price is testing 150 resistance level, which has been a major resistance in the past. For example, over here in October of 2022 rather, when a failure to break above it led to a significant move lower, and again in the latter parts of last year, where the dollar yen struggled to rally above this level, creating a double top there, causing a break to the downside. So the importance of the 150 handle cannot be overstated from a technical point of view, at least anyway. And what happens around here could have major implications insofar as the short term is concerned. So keep an eye on prices closely. While it's possible that the dollar yen could start heading lower once again from here, you may be able to observe a cup and handle formation here, which is a continuation pattern suggesting that it may break to the upside. And a move above the October's high of 151.90-ish could be on the way. So that's a longer term perspective. In the short term, there's certainly room for some weakness, but whether or not we'll get that remains almost entirely dependent on incoming data, although the economic calendar is quite quiet this week. So let's see if the dollar will find any other reasons to sell off. But it is right at 149.50 here, which is the base of last week's breakout. And this level was previously resistance. So it could turn into support here, leading to another move higher. But in light of the fact that the dollar has weakened against other currencies, it's important to wait for a bullish looking candle formation here, such as a hammer candle, before potentially looking for any bullish trade ideas. 148.93, the low of this candle, is now the line in the sand for me insofar as the short term is concerned. A move below that would signal that the breakout from last week was perhaps a false move. So a move below that level would be bearish in the short term outlook. Thanks to the weakness in the dollar, gold is now up for the fourth consecutive day, rising above 2015, which was a short-term support level that gave way last Tuesday when that CPI report was released from the US, before reclaiming it today. So 2015 is a pivotal level, and if gold were to move back below that level, I think that could cause some weakness in the days ahead, given that people who have been buying this rally will potentially rush to the exits. So a move below 2015 could pave the way for a move down to 2000 initially. Then the previous week's low will come into focus at 1984. Thereafter, we have the December low at 1973, below which we have the 200-day moving average coming in at 1967. So those are some of the key support levels to watch on the downside. On the upside, Tuesday's high at 2031 is this level right here, which is being tested at the time of this recording. So let's see if it can break that level and hold above it, because I'm not so sure if gold will be able to rise significantly further in the short-term outlook, because we've seen a rise in government bond yields in recent days. If you look at the 10-year here, the yield has been on the rise, moving back above the 200-day moving average. And although it's a little bit weaker today, but there's no significant news to change its direction. So yields should remain supported for as long as economic data in the US remain resilient. And that is increasing the opportunity cost of holding gold over government bonds. So I'm not so sure if this rally will last much longer. But in the long-term outlook, I'm certainly bullish on gold, and I foresee fresh record highs perhaps later in the year when central banks start cutting interest rates. All right, let's look at some indices now. And looking at the German DAX index, it is trending quite strongly, isn't it, at the moment? Previously, this area that I have shaded in blue was significant resistance in 2021 and a couple of times last year. Before we broke above it, it came down to retest this level on a number of occasions, and it bounced from there, leading to a fresh record high. So now the DAX is trading in a very similar fashion as before, whereas now resistance or former resistance is provided between 17,000 to around 17,060, this shaded area where the index had previously found resistance. And given that we've broken above this area last Thursday, now that we are testing it from above, and given the strength of the bullish trend, I wouldn't be surprised if the DAX were to bounce back from here and head towards a new record high. The S&P 500 is trading lower today, along with the other US indices, which is interesting to observe because we've moved back below the psychologically important 5,000 level. So this is going to be very important to monitor. Let's see what happens here. If we bounce back from the 21-day exponential, as we have done so in recent trade, then it's likely that the bullish trend could resume and we head to new highs, possibly later in the week. Whereas a potential break below this black line here would be a short-term bearish development. For more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com.